Let's think about the purchases and payments process. Now, you may also hear this referred to by a number of other names, the expenditure cycle, purchases and payables, or the names of the distinct activities that take place throughout the process. So the important thing to keep in mind is this is the process where the organization acquires goods and services that it needs to stay in operation or keep things moving forward. So when we look at this process, we want to first start with what are the key events, and we're going to start with the purchase requisition. What this is basically a recognition from one of the departments in the company that we need more. We need more goods. It could be from inventory management or inventory control on the production floor saying, hey, we're running out of raw materials, let's get more in. It could be a department recognizing we're running low on some type of office supplies, toner, or whatever. And so the requisition goes to the purchasing department and says, we need more, go ahead and get it for us. At this point, the purchasing department puts together the purchase order itself. Purchase order. Now, some companies don't have a formal requisition process in place. They may go directly to the purchase order. But many organizations, especially larger organizations, are going to use a requisition, and almost any governmental agency or defense contractor, government-related entity, you'll see uses a requisition process. Now, of course, before we even get to the requisition, there are a lot of preliminary activities that have taken place, identifying potential vendors, maybe sending out requests for quotes to various vendors, putting together performance contracts for delivery times and the like, especially when we're in a manufacturing environment and we need to know how fast we're going to be able to get raw materials from our suppliers. So all of these things take place as part of the preparation process for getting ready to start purchasing goods and services. And then we go ahead and work on these first two steps, purchase requisition, purchase order. And then we can start managing our payables. And by managing payables, we're basically saying, well, how are we going to determine when and how much to pay? So we're keeping track of all the payables that we've accumulated for goods and services. Goods and services. And we're going to determine, well, do we have a discount that we can take? And we want to take that into consideration when we determine the timing of payment. And we also probably want to consider, our cash flows. If our cash flow cycle is such that we don't have the cash we need to take the discount, well, then we can't take the discount, we pay later. After the payables have been managed, then a payment is made. And then you can determine whether the discount is taken and recorded here. Or as some companies are going to do, they will record the anticipated discount right when they make the purchase. And then if they don't take it, then it's a discount lost. So those are two different approaches that can be taken. Generally, a company using the anticipate the discount and record discount loss is using it as a performance measure for purchasing managers. All right. So the accounting for purchasing is pretty straightforward. Generally, the purchase requisition and purchase order themselves are managed within the purchasing subsystem, or the purchasing subledger, if you will. From a general ledger standpoint, we would have our first impact when we actually receive the goods. So if we're purchasing goods, we'll receive inventory for say $1,500, and then we will credit accounts payable for $1,500 goods received. At that point, we'll go into our payables management cycle and determine when to make the payment. And at some point in the future, we may make that payment. So we would then debit accounts payable for $1,500, and then credit cash. And in this case, we actually did take a discount, and so we can record that discount. Purchase discount, $30. All right. And then we will put in the comment, paid for purchase with 2% discount. So basically, this is the overview of the accounting, overview of the steps that take place. So let's jump into some more detail.